Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, May 3rd, 2023. If anything, again, it just remains to be very interesting how our markets are trading and what they're choosing to hang their hats on. We did get every which way, including sideways today. But again, it was the big Fed day, and the interest rate did get hiked 25 basis points, and a couple of changes made to their lines of whatever they're going to talk about in terms of what comes in the future. Is there a chance that we're going to pause? Is there a chance that we're going to, go lower, whatever? That kind of was taken off the table, and there's going to do it month by month now, day by day, or whatever the situation may bring about. But here's something very interesting that Jerome Powell did say, that the banking system has been stabilized and is okay. And then when he was all done, he walked away from the mic and the market closed. PacWest Corp hit the skids and went straight down, looking to be sold, looking for someone to step in and take them over. Remember we talked about the regional banks? PacWest Bank Corp, regional bank, going down. And so it begins. And again, this is on the heels of the Fed chair talking about, we got it under control. Okay, so what are we to expect? Who's on that list next to come in and start buying these banks that are going to fail? We're expecting JP Morgan to continue, or is Goldman going to step up? Is Bank of America going to step up? Who's going to step up now? Because the list is going to grow. And this is just not a few banks. Remember what I've said. And this is facts. These are things that are already out there for public consumption. You can go look it up. You can find this. $2.2 trillion of unrealized losses on bank sheets. And as they uptick the interest rates, the losses grow. Now, the losses are not necessarily the fault of the Federal Reserve or of the Treasury, but they do have to take some responsibility because of the year after year after year after year of quantitative easing. That does play a part here. But it really boils down to traders, bank traders, who decide we're going to take depositors' money, invest it into treasuries to hold them to maturity. And then the interest rates go up. So the other thing that Jerome Powell talked about today was the fact that, well, they're going to continue to try to get inflation back down to that 2% target. I'm like, when are you going to give that one up and kind of maybe raise that target a little bit, make it a little bit more achievable? But they say that there's been improvements on the inflation front. There's been improvements here, improvements there. And then the sellers moved in. And we started to see the markets really take a tumble. And as we start the Globex session, they gapped lower. And initially, the Dow dropped 250 points. Now it's only down 197. The NASDAQ dropped, I think it was 50, it was down to 44, so that's about 14 points, about 54, 55 points. Now only down 39. It kind of, the markets are wide. You could drive your Mack truck through them, but they're trading. The Russell is, I guess, percentage-wise, it's down almost 27 points. The bond market, rally. The bond market continues to catch a bid in terms of safety. Gold, you want to see something impressive? Remember, we've been talking about gold? Remember? Look where it got to today. This is after hours. This is in Globex. Gold ignites the big burner after climbing all day and is now trading at, or has reached a high thus far at 2086.70. Now, mind you, let me just pull this open a little bit more. I got to go even further. How about that? It's been a while since we've been up there. 20, here we have it. This is 2078. This is 2089. We are at and have touched 2000. Actually, this is saying the high is only 2085. We're within $4 of making new all-time highs in gold. So if everybody wants to kind of yuck it up about what gold can and cannot do. So, but I can put now this small minuet, wave 2 here, and now we're continuing in wave 3, right? So we're in minute 3, and now inside we are in a 3 of 3 move. This should really begin to go now. And if the whole mood shifts, because things are not looking as pretty as the Fed wanted them to, right? So we get that same type of a bid to quality, like flight to quality, quite flight to safety. Where do I want to put my money? What's going to hold its value? Maybe not gold, but I want to tell you, if they really start to attack things here, as they are now in the dollar. So again, we're sitting in this precarious position where the things begin to just break around. Now, at what point will market players begin to realize it's been a ruse? That you just to understand for just a moment how far and wide they've got to dig on CNBC and Bloomberg News to pull people in to talk their talk. They will go far and wide to pull them in. The CEOs they pull in. We've got senators now they pull in, et cetera, et cetera. To continue to defend something that really should not be defended. Yes, I do not want to see a banking crisis, but I don't see how it can be avoided. There's only so much the FDIC can do. There's only so much that the federal government, the Treasury Department, whatever, can do. As a country and our government, we're still trying to negotiate raising the debt ceiling. And I swear, there are a lot of people, even within government, that just aren't taking seriously what the consequences would be that come June 1st, the United States can't and doesn't have enough money to pay its obligations. We certainly can't start issuing new bonds, new T-bills, and everything else. We have no way to raise money. Right? How's that going to happen? So we have a bunch of Congress people who are going to hold the line. We're going to make those other side, we're going to make them come to the table. We're going to make them we're going to cut back. We're going to cut back on government spending. Really? Let's start with your job, Mr. Congress, Mrs. Congressman, Congresswoman. Let's start with your salary. Let's start with your golden package. Let's start with your benefits and see how far we get. Because that's what they're asking us, the American people, to do. And again, I'm senior, folks. I do receive Social Security. I do have Medicare. And that's one of the things that'll go. Sorry, we don't have enough to pay for your Medicare and your insurance. Really? Something that has been, I've paid into for a long time that I'm entitled to. Sorry, we're running out of money. Hello, Congressman, Congresswoman. How about your salary? How about your insurance? Can we take that away from you? Can we look at your bonuses? Can we look at your pension? Because you need to serve just one term as a congressperson. And by the way, folks, go check out their pay scale. They only have to serve one term, and they've got the golden parachute. You get a pension and your insurance for the rest of your life. So you want to overhaul something here? Don't overhaul the American people. Overhaul the government as you all want to do, but start in your own backyard. Sorry, I'm going to step away because I shouldn't get political, but come on, let's be serious here. If they don't get it together and the United States cannot pay its obligations, what do you think is going to start to happen here, folks? And please don't tell me and leave in a comment section, never happen, never can happen. All right, fine. Step up to the plate and buy it. In fact, why don't you sell gold? Because it's going to go back down. Or better yet, sell the bonds. Come on, let's put on a position that'll fit you saying it'll never happen. And I'm saying it's like, I'm not guaranteeing that it's going to happen, but I'm going to say, you guys better make some adjustments to how you want to trade and what you're thinking. Because if it does, with the never can happen attitude, guess what does happen? We crash. It's the unexpected. Let's add into this. I know this is kind of like standing up on the stump, but we have Russia coming up with excuses to just send in assassins to try to kill Zelensky, because they're saying that it was the Ukraine, it was Zelensky that sent some drone that they blew up over the Kremlin to assassinate Putin. I'm like, okay, come on. So what are they showing their people? They're showing the video of this thing going over the Kremlin and blowing up. So is that rhetoric? Is that heating up? Is that now going to press it to the next thing? Is that going to give Putin and all of his things, well, we're going to go start a new offensive if they can? There's something else that's heating up, folks, that's just kind of sitting there waiting to happen. What do we do? How are we going to handle it? We're already supplying billions upon billions of dollars, but come June 1st, we won't have the money because our government can't come to terms on how we're going to lift the debt ceiling. How are we going to pay for ourselves? How are we going to pay your salary, congressman, congresswoman? How are we going to pay your salary? What? The government, that's who pays you. How's that going to happen? Now, back at the ranch, they're stepping back in to buy this again. Maybe it's just, a short little uptick. But I'm going to start here in the NASDAQ. I'm leaving this all blank because the algorithms, or just the stop hunt, the algos that just go on stop hunts, really produce these types of moves that were so basically out of line, but didn't stop them. They went up, they grabbed whatever they could grab, turn around, come back down, turn around and nosedive. What's that do? It really can screw up one's count. So here on the NASDAQ, it really is appearing to me that it's going to be, I think it could be 1, 2, and then 1, 2. And then what's this? I've taken it all the way down to a 15-minute chart so I can look inside here. Still 1, 2, 1, 2, 1, 2, 3, 4, 5 of 3, possibly. A, B, what's all this? A C. But I'll tell you what I constantly do, and a lot of people agree or don't agree, but you're going to have to look at it a little differently. You got to go to a line chart. It takes away all the extremes. Now, yes, I include the extremes many times when I'm doing Elliott or doing Fibonacci, because that was a move, and it did go there. But in terms of the Elliott count, Elliott used a close, hourly close. So every hour he would jot down what that close was for that hour. So you jot down the open, and then you just start taking the close every hour after. And then he constructed his charts. So that's how he based the Elliott wave principle on, not on extremes on candlestick charts or even on bar charts. So when I take it and I put it on the line chart, it comes a little bit cleaner. 1, 2, 1, 2, 3, A, B, ugly, but it's a C. And that's wave 4. And look what we're doing. 1, 2, 3, 4. We're coming into a fifth. We're coming in. Whether it's down, whether it's not done, I don't know. But if I had to go back and we just stick it on even a bar chart, we're going to have to, we can still do it. But when we're looking for what's what, oops, I would do something like this, because we're looking for what this fifth wave could be. Well, it's already reached 100%. It's just that wave 5 is not the shortest wave. Wave 1 is. So if we had to go and we had to look at it on an Elliott basis, that high is 13,371. And then we're going to go to that low down here. And actually, it's probably right. A, B, C. Yeah, we got these and all these irregulars, but for the benefit of the doubt, I will use that. And that was 13,258.75, 13,258.75. 13,371 minus 13,258.75. It's 112 points. And if that's my high, and I've got to go 112 points, so I'm going to go 13314 minus 1112.75. It's 13,020. Well, we're way beyond that. So what's next? We actually would be 13,200 something. So even if it's going to be, again, it's 120, what did I say? I'm taking that at 13,257. Yeah, 220. Let's just call it 120 points. And we're going to times 1.618. It's 200 points. Okay, so now we're down to 31. We're way beyond that. So we have to start going out in a different manner to put what are we doing here? So I'm leaving it all blank until the market becomes clear. But if we had to put some markers down, well, then I'm going to start up on this level, which is, this is like the weird part. That's the 50-minute chart. Let me go back out to my hourly chart and let me pull this down. So activate, bring in, and bring it down there. A little bit different. Okay, so what we're looking at. I know about that. That's a negative number because that fib will never come in. So let me go. Let's try this again. Let's go out to the daily so we can start looking at this. These are our numbers coming off. Because remember, also that what I did is that I put the primary B wave, put it in. All right? And in the NASDAQ, it all fits. Wave 5. Now I got to take out some of this stuff because it gets a little too congested. 1, 2, 3, 4, 5. Wave 5 did. The minor 5 did produce a new high over minor wave 3. Perfect. The C wave did move above the high of wave A. Perfect. ABC, perfect. All fits, all in line. So now I'm going to go down and I'm looking for what we can do here. Now, intraday, how are we going to start drawing our fibs? Well, I have to go interwave to start looking at that. So if I'm really thinking, what can this first wave do? I can put in several different layers of support. We have price support, but that was a pretty strong rally. So our price support is right there. It slid through it. Our next price support would come in slightly right about there, or we could say even there. So 13,000, that works. Wave one is 12,991. That works. We have this low, 12,866. That works. So we do have points on the way back down where we can start to put this together. Once we do get a wave one, then I can do a wave two. Then I can add extensions for a wave three. But right now, I'm leaving this blank because it's just not, it's clear on my line chart, but this is not done. So I need this to pull in. And remember, as I've been talking about, and once we can count the first five down, as ugly as this is, once I can count the first five down, it's just going to give me more stronger confirmation that primary wave B is complete. So yesterday, I told you I had to leave open, and if it went up and it broke, which when I take it back out and put it on a candlestick basis, it did. But that's an extreme, and that's an extreme, and this is an extreme. So this is actually the low of the whole thing, or the high, 13,248. And this actually is the low. It's up here, 13,297. So we're pretty far away. This was an extreme. So yes, it counts because that price did occur. A trade did take place there. But it was an extreme. It's taking out the noise so I can see the move. And that's what I do. And unfortunately, that's one of the side effects or one of the after effects of a lot of the algorithms that'll go on these stop runs that'll just move. They just go to trigger other levels. They exist and they're real, and all those trades are real. So on one hand, they're included. On the other hand, to work out where are we in terms of an Elliott count, it's like, how much do I need to take the extremes? I can leave it in and still have the count, right? So this could be 1, ABC, 2, 1, 2. So that's just minute 1, minute 2, minuet 1, minuet 2, minuet 3, minuet 4, and we're in minuet 5. Possibly it completed, because here we go. They're going to buy it back up. Whatever the reason are, doesn't make any difference. They're now stepping back in because we already do have an understanding that we would be looking for, and therefore I would take it back to here to wherever this low comes in. So right now I'm leaving it blank. I'm going to let the market work itself out here. But what I will say, from what I can see, the highs for right now, for this primary B wave, for the intermediate C wave, all done. And so I don't feel that even with Apple's earnings tomorrow, that Apple would have to not only blow the doors off, they'd have to blow the whole neighborhood away. Well, crop flattening, just flatten everything to move the market 300 points. That would be something against the backdrop of what we see happening. It just no longer fits. So I do think we're in the next leg down. We're in the very first leg. So again, let's start at the top. If we are in a primary C wave down, what that exists of is 5 waves of intermediate degree, which will be labeled 1, 2, 3, 4, 5. So if we're in intermediate 1, what's inside of that? 5 waves of minor degree. If we are inside minor wave 1, what does it consist of? 5 waves of minute degree. And that's where I think we are. We're getting ready to put in 5 waves of minute degree down to form minor wave 1. When that's complete, we got to go through another minor wave 2. And boy, have we seen these things just lag and draw and just kill us. So we may reach that low overnight and head into a minor wave 2, or we already have reached that low and we're dropping into a minute wave 2. So even if I have to go to the point where I can call this minor wave 1, could be a push, but I may do it. I'm going to wait. I have to see. I'm still going to be labeled out. But I'm just letting you know, this is going to be a little bit longer process. This is not going to unfold like lickety-split. There's going to be ample opportunities to be short and ample opportunities to be long. If you're a day trader or a swing trader, there will be plenty of opportunities. But when we're getting kind of confirmation across the board of what's happening here, from gold, from the bonds, from the equity markets, from what we can see. But you can see they step back in, or Apple's reporting tomorrow. So, there's just a lot of still activity that they take. If you're a dealer and one of the stocks that you have to deal in and you make markets in is Apple, well, you're putting blinders on to everything else because your focus is Apple. Your focus is the bid and offer. Your focus is the options. You got plenty to do. So you're not really out looking. It's like, well, what's that doing to the NASDAQ? Or what's that doing here? You're focused on what's in front of you. And that's basically how we need to trade these as well. So again, for tomorrow, I'm not sure, but it does look like we should continue to see a reaction to the downside. We got additional information. We got additional not such good news. Let's see what happens. Oh, and by the way, I want to go back over and take a look at the daily chart. Here in the daily, there's the 20. It broke the 20 today, coming down. Now they're trying to rally back up to get back up to that 20. What's up next? If it fails, the 50. 12,827 on the daily. So we have 3 negative bars on the daily chart. So a lot going on. A lot going on. And let's see what they do. Now, bringing it back down to the hourly chart, we have punctured and now trading below both 200s. They're still flat, but if we continue to head lower, they're going to turn and go with. There's the 4, the 8, and the 20, all kind of heading sharply lower. So let's head over to the S&P and see what's going on over there. Same story. The gap was a little bit bigger. Now, also a little bit cleaner. Let's drop it to that line so that we can see how clean. 1, 2, 3, 4, 5. It's the NASDAQ that creates the problems. It's the NASDAQ that gets all of these crazy moves going as algorithms go on stop hunts. It creates what it creates. Not easy to count. So I come over and I look at this. 1, 2, 3, 4. Here we have the 5. Now, if you wanted to really, same basis, we're going to be looking at what do I have that I can use that's going to tell me what this 5th wave might look like. And I'll keep it on this chart, right? We'll keep it on this one. Well, 100% is 4076. where wave 5 would equal wave 3. Again, remember, the rule is that wave 3 can't be the shortest. Most often, it's the longest and the strongest. But we're finding more times now, the fifth wave will come in equal to or greater than if the fifth wave decides to subdivide. So if we decide to subdivide, which don't know if it's really doing it, it just kind of started to come down. And this is what it's doing. So this is what the market is basically doing. And now we've already dropped and reached that 100%. And we go further. Possibly, because again, I'm on an hourly chart and it's straight down. So I'm not getting any breaks. I'm not getting any extensions. It's just a straight down move with a gap. So if that's enough, then I'm going to be taking this one off. And I'm going to start adding. And I'm not going to leave them here because I'm not calling that's the low. I need to wait. And then we start moving this, and now we're looking for the wave 2. So we still have this potential, even if that's it, right? And we go back into wave 2, guess what comes back into play again? 4140 to 4150 again. It's like, will we ever get away from those levels? It's going to take more time. So, and if they start to move, this is a comfort zone. This is a comfort zone here. Actually, all the way up is a comfort zone. So we shall see. But I'm leaving this label actually off as well. So what I do have on, where are my fibs? Here they are. That's primary B. We did a little bit. C wave did not take out that high. We do have a failure. Good, over 40-point failure, but it's still a failure. And we did get above that high. That was a good thing. So we have 38.96, 37.07, 35.53. And where again? See again. Primary wave C would be equal to primary wave A, common at 2,900. Where's my actual support zone? I have 3,000 down to 2880. And there we have it. And there we sit. So you're going to start to see things line up there. And it's going to make it very possible that that's where we end up. Now, so what we have, so all the moving averages, look at what they did. They broke them early. They broke below the 200. They broke below the 50. They broke below the 20s. This all just came piling down, all on it. Let's go out to the daily chart and let's take a look here to see what we have. 1, 2, 3 negative days. In fact, folks, in the S&P 500, we broke below the 20, we broke below the 50, we broke below the 200, but the 200 has been recovered in a small bounce. Negative, negative, negative. So today we closed at or just below the 50-day moving average on the daily chart. Negatives, lots of negatives building. So when you want to consider, oh, we're going to go up, you better start taking a look at a little bit longer term chart. So this is where I'm going to complete it up for today. Again, I'm leaving this open right now, but I am considering that the primary B wave is complete. And we are now building on our first 5 waves down on the hourly chart. And if that completes it, and then you know where I'm going to draw my fibs. All right, that's it for today. Tomorrow, on Thursday, let's take a peek, see what we got coming on. Thursday, we have a U.S. productivity, unit labor cost, trade deficit, initial jobless claims. So we get to continue to see how and what it's going to affect Mr. Powell's statements. And then on Friday, we do have the U.S. employment report. So we'll see how this all works out. Have a great evening. Our next update will be on Thursday, May 4th.